everyone. I'm Mirala Ciobanu, lead editor with the papers. We continue our series of articles and videos that aim to bridge the knowledge gap between traditional finance and Web3 payments and DeFi. This year, we are going beyond the buzz to show real use cases of how digital assets are transforming the financial industry. Today, I'm sitting down with Ling, who is the co-president of MetaComp. Ling serves as the co-president of MetaComp, where she brings a wealth of experience in strategic partnerships, business development, and corporate leadership. Her career is marked by significant achievements across various sectors, including the financial technology and public sectors, making her a key leader in driving MetaComp's vision and growth in the digital asset space. Today, we are going to talk about how can we rebuild cross-border payments that are fast, interoperable, and trusted. Ling, so happy to have you here with us.
Thank you. Thank you. Pleased to meet you and everyone online. It's a great pleasure to be part of this interview. And hopefully we could have a very meaningful interaction here.
Yeah, I'm sure. So, can you briefly introduce yourself and explain how your professional background led you to be part of MetaComp?
Well, I have a more diverse background. So, as highlighted earlier, I have different years of experience in both the private as well as public sector. So I have been to Ernst & Young. I've also been to tech firms, including Grab, and now I'm with MetaComp. But throughout the past 15 over years, I've also been involved in the public sector, looking at different legislations as well. So over the time, it has, as technology advances, as we move towards a digital society, it has also evoked a certain curiosity and interest within me. And so I've been paying attention to how tech has been evolving, how regulations around the world has also been evolving along with that. And so when the time came, or the opportunity came with MetaComp, I thought it was an exciting opportunity not to be missed, especially if you look at how the payments or the financial industry has been evolving. It has always been marked by transformation. And in this case, it is moving from the traditional financial world, or the so-called Web2 world, moving towards on-chain Web3 world, whereby some of the practical pain points that we observe in the Web2 traditional financial world can be addressed by the solutions available on-chain. But at the same time, it is also, as we move on-chain, there remains a trust deficit problem that we will have to address. And so how can we build infrastructure to address both the practical pain points as well as solving the trust deficit issue? So this is where I thought that, for MetaComp, we are well positioned in this. So coming in from a Web 2.5 perspective, it is to harness the strength from the both worlds. It means the fiat Web 2 world as well as the on-chain Web 3 world to deliver the benefits that comes along from both worlds, and yet to solve some of the challenges that whether players in each of the respective world face. I thought that is something that is very exciting, and hence here I am with MetaComp.
Yeah, you mentioned many things there, so we need to unpack a bit. So we have the Web 2.0 payment infrastructure, then we aim for a Web 2.5 infrastructure. In between, we have some challenges, but we start with the Web 2.0 infrastructure. So if we look at today cross-border payments, how would you describe the current Web 2.0 infrastructure? However, I have this feeling that the industry is actually innovating, it's moving towards a new level. But if you are to describe the current infrastructure, or when you mention Web 2.0, what do you refer?
Well, I think the current Web 2.0 infrastructure, some may describe it as similar to an analog system, but with a digital facade to that. Especially if we go digital with data and all, that's one way of describing it. But at the same time, if you look at the current system, it has been in place for many, many years. For example, SWIFT has been around for almost close to 200 years, and such systems work. And we see trillions of dollars crossing borders or being settled on a daily basis. One would therefore ask, so if it's working, why do we need to change it? But I think if we look at the current system, while it has worked in most instances, there remains pockets of opportunities, if I can put it more positively, that we can continue to look at. There's some challenges that remain to be solved. As mentioned earlier, I described that there are some practical pain points that continue to exist in today's system. For one, there is still cost to this because there are different layers, especially if we look at cross-border payments and settlements. And if we are looking at cross-border payments in today's context, on average, it can cost about 15 to 30% in fees. And so this is considered quite significant, especially for small and medium enterprises, which comprise pretty much the bulk majority of enterprises around the world. And SMEs do drive economies around the world as well, notwithstanding the big boys out there. So if we look at that, therefore, such a significant cost not only add to the cost of business for them, but also could be barrier to entry into new markets, or even to be able to compete and survive in this very competitive world. So that's one, the cost. Second is the efficiency. So one of our studies in conjunction that we have co-authored with INSEAD showed that for any payment settlement delays of 2 to 7 days could represent a huge opportunity cost to SMEs in particular. And this opportunity cost could be more than the transaction cost itself. And interestingly is that if these SMEs do not have access to efficient, both in terms of time and cost, payment systems, they cannot scale. And if they do not scale, they do not have the critical mass needed to actually access or to be qualified for these systems. So it becomes a catch-22 situation. So in this case, especially for speed-critical SMEs, that means for SMEs whose business require to be high speed, then such delays would be a huge challenge for them. Then next, another thing maybe to look at is that correspondent banking relationships have also been declining globally, about 25% between 2011 and 2020. One of the key reasons is because to maintain such links between the two institutions could be very costly. Some would estimate it to be about tens of thousands annually for each link, just to do due diligence. So for smaller markets, for smaller players, then this would be a huge challenge for them, or even a huge barrier for entry. So if we look at some of these, challenges, it would seem that if we don't solve this, then the smaller guys or the newer entrants will find it very difficult to compete on a level playing field. Now, on top of that, if we think about how geopolitics have been very dynamic in recent years, what we want to also avoid is that money get caught in transition. And that would inevitably add to cost of business. And if the fluctuation is going to be quite wild, then the uncertainty would be a huge concern for enterprises, especially those with very little cash flow or fats to begin with. So all these are some of the things or factors that I think we need to, some of the issues that we will need to solve for today's cross-border payment, or the so-called Web2 payment system.
Yeah. So definitely the benefits you mentioned here make sense. And actually, I wanted to ask, because many times you stress this fact that the Web 2.0 infrastructure, in a way, doesn't cater for small markets, for small businesses' needs. But then again, you also mentioned about the geopolitics aspect that could impact also the enterprises, the big players. So in a way, this Web 2.0 infrastructure doesn't solve for neither for small ones, neither for big players. I mean, in terms of some of the inefficiencies that it can bring.
Yes, and I should add that the impact could be disproportionately or asymmetrically a bit more for those that are smaller. And in this case, I should also, if you would indulge me, is that there are certain corridors that are very well established, especially for advanced economies. I think they are already very efficient. Probably you won't see or observe this impact that much. But for geographies or markets that are especially the emerging market ones, where their fundamental infrastructure may not be as mature, the supply of US dollar, which is now still the most dominant currency for settlement, is a bit lower on the supply side, then the current system will mean some quite as considerable inefficiencies for them. And as I mentioned, especially if with the geopolitics being quite dynamic now, you want to settle as soon as possible so that you reduce the FX exposure, you reduce the exposure to the risk of suddenly having new policies being imposed by a certain or unilaterally by a certain economy or regulator that will therefore add costs to the business.
Yeah. Well, so scale, costs, efficiencies, you got me convinced. Regarding the Web 2.5 benefits, because these were some things that were lacking from Web 2.0. But now I'm curious, now that I'm convinced, what are the core building blocks of Web 2.5 payment infrastructure? How does it look?
Yeah, so I think that's a great question. I would say that there are two fundamental building blocks here. And in our context, we call them the two engines. So first of all, you will need to have an engine that is able to do conversion and settlement in a compliant, instant or time effective, as well as cost effective manner. And that's interoperable so that there's flexibility. So in this case, by design, it has to be able to connect between the Web2 fiat side as well as the on-chain Web3 digital payment token side, or some will call the digital assets, crypto, or in this case, stable coins. So for us in MetaComp, we have the StableX engine, which is our proprietary FX aggregator, but it is a conversion engine that allows fiat, stable and fiat, and stable conversion. And so in this case, by design, it is meant to be able to API connect with our partners, both in the Web2 traditional financial world, as well as on-chain Web3 players, including, for example, stablecoin issuers, so that we can facilitate this interoperable conversion. And on this engine, there are different rails that are available. Of course, you have the conventional SWIFT rail, so that's still in US dollar, but we also use stable coins as rails. So we have the major US dollar backed stable coins working with us as partners, and we use that as rails as well. And then through smart routing, at the point of transaction, the smart routing will then determine based on which path is the most time and cost efficient to do that conversion. So the first one is an engine that is compliant, instant, interoperable, enabling the conversion. The other engine is what we would say, what we call from MetaComp's, our own engine is VisionX. This is important because this solves a trust deficit issue that I mentioned earlier. Now, we have the Web2 world, the traditional financial, highly established. You have all the information, you have all the systems, processes, you have trusted institutions, trusted by regulators, trusted by enterprises, consumers, by everyone, because it's established. So Web2, regulatory trust, very established. But at the same time, because we are now touching the on-chain Web3 side, while the technology is maturing very quickly, but there are still sectors or parts of, or some regulators, enterprises, and also consumers who continue to be hesitant or have reservations about the transparency, about the safety, security of having transactions on chain. Therefore, we have that's why there are requirements such as travel rule to ensure traceability, etc. So in this case, what we need to solve is a trust deficit issue. So therefore, the engine must be able to be end-to-end. That means to be able to cover the risk screening and monitoring from the Web2 fiat side, as well as the Web3 on-chain side. So from your usual name screening to the screening of wallets, end-to-end, as well as the transaction level, making sure that we abide or comply with the AML and CFT requirements. So there must be that interoperability. In today's context, it's not the solutions are in silos. You have a full suite of solutions in the Web2 TradFi world, and you have another set, many databases, many tools in the Web3 world. But there is none that connects both. And this silo and this gap between the two systems could be made use of or be abused, or should I say, could be arbitraged by people with agenda. And so we want to avoid that. So in this case, you need an engine that is intelligent, that can be end-to-end in a seamless flow, that is integrated, and that can generate a unified risk rating, an instantaneous risk rating, so that when every transaction is being made, there is a reliable risk rating that you can look at, and then you make an informed decision to see whether you should continue with that transaction or not. And so in this case, MetaComp built the Vision X engine with this in mind. So with these two engines, the conversion as well as the risk control, the risk screening and monitoring side, the risk intelligence one, I should say, then we are able to therefore power the payment solutions, whether it's collection, payout, and then the in-between, whether it's accounts or wallets, a full suite, and then it's interoperable. So you can, collect in stable and then pay out in fiat, vice versa. Or fiat, but using stables as the rail. So that becomes many possibilities, becomes versatile. And then on top of that, should anyone has got idling balances, whether it's fiat or stables, for example, then the wealth solution can come in to make sure that we maximize the potential of every balance that may be available. But I think circling back to your question, is that I think what is essential will be that two engines to power all the different solutions that we may be able to think of or would desire.
Yeah, and I love the fact that in the beginning you stressed this idea that trust is important, and now when talking about the building blocks, you actually come up with a practical example of how trust is built, not only let's say in a psychological, metaphorical way, but also via technology. Solutions that in a way avoid this arbitrage or loopholes that can be created when two systems are mixed and everything is tracked with the data and intelligence. And I was curious because several times you mentioned also Web3, and maybe some of our audience is not that, I don't know, aware of all the nuances. Maybe can you, in a few phrases, kind of suggest what are the differences between Web 2.5 and Web 3?
Okay, so Web3, if I'm understanding you correctly, Web3 would be purely on-chain. So giving an example of transaction, so it could be simply transferring digital asset. It could be crypto, it could be stablecoin from one on-chain wallet to another on-chain wallet, for example. And so everything is purely on-chain in the Web3 world. But Web 2.5 involves moving money from the traditional financial so-called Web 2 world to a on-chain Web 3 world. Now, what this would mean is, for example, from Sing dollars, I want to move that money from Sing dollars in my bank account and go through a conversion of what we call the on-ramp, and then it could be converted to, for example, USDC, which is a stable coin, and then pay out to someone else's wallet on chain. Now, for this, in this flow, there are several things that will have to happen. On the one hand, the money would have to move out from the bank accounts here in the Web2 world. And then you may need someone in between to help you do the on-ramp. That means to mint that USDC stablecoin. But before you pay out into that wallet, you might want to do screening of that wallet to make sure that that wallet is clean. I'm simplifying this, but one can imagine that this is moving from a fiat Web 2 to an on-chain Web 3. And in between, a lot of things can happen. And so what this would require is therefore a powerful engine that can do that conversion almost real time, to do that on-ramp and then possibly off-ramp eventually, but at least that conversion. And then you also need to have another engine to make sure that end-to-end, you screen the risks, you make sure that you are able to rate that risk, and then you make that decision whether to proceed with that transaction or not. So in this case, it would involve moving from one world to another world. And if you do not have a platform that is Web 2.5 in nature or by design, then you will have to risk, doing one screening in this side and then another screening on that side. In between, information does not flow. And if anyone wants to, play on that information asymmetry, then you could then therefore be at risk of getting into legal troubles later on. So that's that. So if I am to understand your question correctly, therefore this would be an illustration of how a 2.5 and Web 3 are different.
Yeah. So yeah, it was something similar to this type of questions. Explain things to me as I was a 5-year, if I were a 5-year-old child, and it made sense.
Okay.
Yeah. And now, again, thank you for providing this comprehensive explanation. And if I want to be part of Web 2.5 as a provider, where should I start? What should be my first questions? Where should I look for?
Well, I think first and foremost, I would start from what is your commercial objective that you are trying to achieve here. So I think that's first and foremost. If your business will entail a lot of cross-border, then this would make sense. Because otherwise, usually domestically, systems are usually efficient already. So more or less. So that therefore, the need for a Web 2.5 is lesser. The beauty of having on-chain is that it can be 24/7. It can be very fast. And in many cases, it can be at a lower cost as well. So I think first and foremost, it's whether commercially, is it something that will benefit you leveraging on such a system. Then I think also need to look at the volume for institutions, large institutions, including as well as FIs such as banks and PSPs that have to process millions or even trillions of dollars. Then this will also make sense, because the speed efficiency, as well as in some instances, the cost involved in the conversion, because the cost of FX can be in percent, right? But the on-off ramp can be in beeps, just to give a sense of the scale. So in this case, when you are processing large volumes, then the savings, the efficiency, the cost would then make a lot of sense. Then following that is whether to build in-house. That means you build your own system, or to work with partners like MetaComp, where we will supply or provide the infrastructure, customize a bit along the way if needed based on your unique circumstances. Then that is another question to think about. I would say that it makes sense to work with providers like MetaComp, because first of all, we have spent years and poured in resources to build our systems. Even our core banking system is Web 2.5, proprietary Web 2.5 in nature. And as I have explained earlier, our two engines are powering all our payment and wealth solutions that we are able to offer our clients. Wealth will be offered by our parent company, Alpha Ladder Finance. And so we have a mature set of solutions. Then we are also licensed by the Singapore Monetary Authority of Singapore. So clients can therefore work with us with peace of mind as we ensure that in all transactions that we process, that we must meet the regulatory requirements. So I think in this case, for potential or prospective clients looking to explore into stablecoin or the Web 2.5 strategy, I think for a start, it makes sense to work with players like us so that you don't have to build or invest CapEx upfront. And then you can take the opportunity to see how things work out and then adapt your strategy along the way. We would love to be a trusted partner to institutions as such.
Great. And now, the crystal ball moment. So if we are going to look ahead, how do you see Web 2.5 infrastructure shaping cross-border payments over the next, I don't know, now with these years, it's harder to say 2-3 years, but we'll try. And what do you think? What will separate institutions that successfully modernize from those that fall behind?
Well, I think the momentum is definitely picking up, especially since 2025. There's regulatory clarity in different jurisdictions, with America introducing the two pieces of legislation, Genius and Clarity. It has definitely fueled the momentum. The anticipated CAGR of stablecoin market has also picked up significantly. So we are looking at reaching close to possibly $4 trillion by 2030. So while it is still a fraction of the overall money supply, but it is at a very high, considerable, very significant speed that we are looking at. And so what I can say is that stablecoins, and therefore in association with that, Web 2.5 is mainstreaming. So this is something that I think we have to bear in mind. And so for organizations, enterprises, FIs embracing this strategy, the earlier, the better. There's always the first mover advantage in this case. And therefore, when the conditions are right, when momentum is at its peak, you're ready to harness or harvest the merits that come along with it. And I think that especially for SMEs that are speed critical, as well as service providers servicing SMEs that are speed critical, embracing this strategy would be of merits, because at the end of the day, Web 2.5, as highlighted earlier, aims to solve the practical pain points that we observe in today's cross-border payment. And at the same time, for example, we are also looking at needing to solve the trust deficit issue, which is something that MetaComp has always been very obsessed about.
Well, thank you, Pei Ling. I love that, you addressed technicalities, also trust, also talked about regulation, and also what makes sense for different types of businesses and company sizes. I enjoyed today's conversation, and I look forward to continue it next time. We'll see with how the industry goes. We'll see how US will be continuing their journey into regulation and how will impact the space.
Well, so thank you so much. It has been a very lovely conversation. Definitely hope to continue this with yourself and papers. And yes, I think that's it's a very exciting future that we are looking at. And hopefully we are all an integral part of this.